What's up, everyone? I want to wish everyone a happy Saturday morning. I wanted to make this video on gold because I think gold has been a really hot topic lately. We've seen it just fly in the last couple of months. It's been an incredible ride. For me, I think using these risk metrics to kind of show you visually how many times it's hit one. Remember from the second video where we talked about the risk metrics, but then also how to use this as a strategy for investing. I do think there's a lot of different investments out there. For me, I primarily stick to ETF stocks, crypto, mainly Bitcoin, Ethereum, and Solana. And then I also am dabbling a little bit into gold. My strategy for the gold is to buy the NEOS ETF, which is IAUI, which pays about I think it's a 14% dividend a year. And it's reflected on the price of gold. So the fact that gold has been going up recently has made that investment look really appealing, especially with the high yield. The other thing I plan to do is start buying gold ounces for my two boys. Part of the channel that I'm going to discuss is how to set up your kids for financial freedom, and that's part of it is holding the physical gold during the times where it makes sense to buy in, and this is kind of what this chart is showing. So I think the reason you're seeing a huge um, surge in this asset class, much like Bitcoin over the last year, is because of one, the government shutdown, right? This idea of trust in the government, people are fleeing, but you also have individuals, institutions, and also governments that are loading up on gold. And they're also selling the dollar, which I think is really important. That's the one key thing that I keep telling myself is the appreciation of the dollar versus the appreciation of gold and Bitcoin, which I'll kind of show here in a minute, related to the housing market. So if you take a look at all of these different levels that it hit, one, so this is back in 82, good year, that's when I was born, 87, um, '06, '08, this one was 11, and then this one is the May 2025, and it hit it just again when it hit 4,300. But the cool thing about this is just remember the type of economy we were in, high inflation in this case. Here in '06, the crash really kind of put gold back on the map that we had down here in '08. It definitely went down with the crash, but when it recovered, the value that it had in '08, right? Looking down here at a price of $725 all the way up to doubling, a little bit more than doubling your money, it recovered a lot quicker than most stock markets, looking at that in '08. So the other thing too, it's affected by obviously crashes that we see, but even with COVID coming around here, it still held up pretty well, and it got up to the point 0.9 risk metrics back in July. So the strategy is to kind of look at the price of gold, which is the blue line, look at the red lines, takes out the emotion, but then you could set your parameters, right? If you want to start buying, like I talked about in the last video at point 0.8 down to point 0.7, that's fine. But for me, I'm going to use the color coding. So this is essentially the last chart, but just visualized in different colors. When it gets up to this red, that means it's hot, right? So that might be a good time to take some profit or sell some of your physical gold. That's not a strategy I'm going to do. I'm most likely just going to hold it, but I'm going to buy more when it gets lower. So the way I look at it is either starting like a high yield savings account and just contribute some of my paycheck, and then when it goes down to these lower levels, being the third asset that I invest in. So it'd be stocks, ETFs, crypto, and then finally gold would be the third asset class that I'm going to start investing in. This is just a visualization. Like if you wanted to put here, I think I have a zero point 0.6 or below. So if it's here below the 0.6, so 2.5K is when you would have got in before it ripped, right? So you could have been buying gold, really since 13 all the way to 2024. I think that's okay, right? I mean, if you're just buying an asset class to um, protect yourself against the deflating dollar, you're actually going to preserve your money better than if it was put into the US dollar, right? So if we would see a chart of the dollar, it would be inverse of this, right? The purchasing power just is not there to sustain. And just to prove that point, I just brought up some of these different images. Houses in 2016, you needed 664 Bitcoin. Now you need about 6.6. And again, this is in 2024. So Bitcoin has went up a lot higher. Same thing with gold. I really like this one. 10 of these would buy you average house in 1929. And then again, 10 of these would have bought you an average house in 2024. So it doesn't really kind of show the increase of purchasing power, but the preservation, right? Which I think is really nice to kind of take a look at that is, 10 gold bars would buy you what the average home would cost in those generations. So it just goes to speak that we really need to think about things differently when we look about the preservation of our assets. This is just kind of shows the home real estate compared to gold ratio. As you can see, since the 70s, it's really kind of been going down. Like people really want to invest in properties, and I think that's great if you need disposable income. But really, you look at the depreciation of the house, and everything you have to take into consideration of getting the right clients in there or renters, the upkeep, the depreciation of things. And this chart really, to me, shows that gold is just kind of on a rampage as far as like pulling this chart lower. And then lastly, I kind of already showed this one, but keep that in mind is that this is really important, I think, as far as the preservation of your wealth, but then also buying assets that are going to not drop in value. So again, I just wanted to kind of show this risk metric. This is how I'm going to be using it. I think right now it's too expensive for me to get in. I'm waiting for a pullback probably under 3 again, so I can jump in. Maybe it won't get there, but it's going to reset, right? And I think the biggest thing for this is right now I'm still DCAing into the stock market, so I feel good, like I'm still getting exposure. But once this pulls back, and it will, I'll jump in a little bit more. Hopefully, if we can get down here again, in 2022, it got all the way down to 1.8 price of gold. So that would have been an awesome buy down here at the 0.3 risk metric. So I just want to thank Ben Cowan for adding this because it wasn't something that was recently was there for a long time. And finally, there was so much pushback. I wouldn't say pushback, but suggestions, right? That we should definitely have this. So I appreciate everyone listening and hope you have a wonderful Saturday.